Hello friends, welcome to our channel. Today we will talk about 5 simple steps to financial freedom. Not having money is miserable. I have existed sharing a 100 square foot area with a roomie and counting every dollar to make sure that I can make it until the end of the month. It has actually trained me a lot. I'm still very careful with money because I know what it means to cut down on your food to make the rental fee at the end of the month. When I was a fresher, I had not believed in creating a great deal of money. However, I wanted to get out of that determined economic placement since I had to make a lot of compromises. So my only hope was that once I graduate, I will certainly have the required abilities to discover a job that will certainly offer me the satisfaction of spare time. Then I will utilize that time to develop a company or skills that will better boost my earnings. It appeared like a reasonable plan, but it had not been long enough. I recognize it was not like I assumed, because I could not wait a few years to graduate and then determine what I want to do. So I decided to try everything I could. I tried to start an online company, got involved in real estate, joined a little startup, and made it after years of dedication and effort. When you do not need to bother with money, trust me, life changes. You no longer base on your every choice on how much does it expense. You will instantly have the freedom to make points that interest you and that's matter to you. You will certainly have the freedom to take a break from everything and don't stress over the rent. You don't need to be a billionaire to do that. It takes much less than that. So I intend to show you some basic steps to achieve financial freedom in this video. If you are starting or still on the route, it will help you a lot. Number 1. Stay cash flow positive. Exactly how good you are at managing your capital is positive, which determines how monetarily successful you will be. If you have taken audit training, you most likely understand what cash flow is. Yet, in college, they educate you that business have capital. However, in life, we manage the same trouble. We need to control the inflow and outflow of cash. To maintain your business healthily and balanced, you have to ensure that there is more money coming in than going out, or the amount of money that leaves the company equal to the amount it receives. No matter just how much overall expenses a business has, it creates more money than it loses. It's an excellent business. Personal financing works the same way. It does not matter how much debit you have to mortgage student loans. Apparently, your cash flow is positive. Number 2. Don't take unnecessary responsibilities. This mistake is one of the main reasons why a lot of people are struggling financially. There may be positive cash flow. However, they take an economic responsibility that they cannot afford. I'm not simply discussing getting a brand new car or lease or credit card or debit card. Even they enter into an expensive relationship. Perhaps they will start a family. Don't get me wrong. I'm not claiming that starting a family is a bad idea. But here is an equation. Allow state your cash flow is well balanced. When you start a family, raise a kid, your spending boosts. If you get a second job or get a promotion, your income increases too. Not bad, right? However, as you get older, your expenses become sensible and exceed your income. So you come to be cash flow negative. For the rest of your life, you will be starving to overtake your negative cash flow. It's referred to as generation poverty. You get to the point where you do not have the methods to develop capital to get you out of poverty. Many people today can't get economically independent, not because they don't work hard sufficient, but they place themselves in a situation where they have nothing else choice but to spend every dollar they earn. So keep your capital always positive. Number 3. Build an investment portfolio. Around 4,000 years ago, in a kingdom in Asian Mesopotamia, there was a guy named Arkad, was poor, like truly poor. To escape poverty, he strove to place food on the table. However, when he get the charge for his service, he placed very little food on the table and allowed the rest of the money to a shield maker that paid interest on the loan. Rather than investing those entries to enhance its standard of life, he lent it to one more shield maker, thus expanding his prosperity a lot more. After repeating this process for many years, his wealth expanded so large that he did not have to work again. He finished up the wealthiest person in that city, Babylon. You could not find a shield creator today to lend him your money. However, you can use various other things to grow your riches. Consider this: the S&P 500 is an index that measures the top 500 US companies' performance. Historically, it has ordinary price of return of around 10%. It means that when you are 20, you deposit and invest $1,000 monthly into the S&P 500. When you get 50, you will have nearly $2 million. And it's just with $1,000. Imagine if you raise that number every year to $2 or $3 or even $5,000. As your earning expand, you will certainly end up with $10 million, and that's how you maintain your cash flow constantly positive. However, before we move on, below is a little disclaimer. We are not economic advisor, as well as anything we say on this network needs to not be taken as financial recommendation. You should do your own study prior to making any type of investment. Number 4. Be liquid. Don't go out and throw all of your money into the stock markets, as investing is not all sunlight as well as rainbows. If you place in $1,000 right into the S&P 500 in June 2007 as example, and also make a decision to withdraw it a year later as you had an emergency, just how much do you think you would certainly have made on that $1,000? I'm sorry to state this, negative 50%. You would need to wait another 5 years just to gain your money back, which is exactly how the marketplace works. It rises and also down every day. In some cases, the crisis hits, and also it may need a few years to recover. That's why if you are serious about the stock market, you should remain in it for the long run to reap off the profits. If you truly feel that you are financially independent, you require to be liquid. If something goes wrong, you are not stressed. You get fired, company going south, or recession is round the corner. Don't worry, you got yourself covered. You have sufficient cash to not bother with the bills for a minimum of 6 months. Number 5. Have a plan. All of the things we have discussed in this video sound amazing. How on the earth do you get the money to do that? The only practical choice seems to win the lottery game. Of course, you can try that. Good luck. However, there is another option. Plan your spendings. You are not going to build a 6 months cash cushion the single month. You are not most likely to develop $1 million investment portfolio in a few months. And guess what? You do not need to. Financial freedom is not the last destination. The goal is not just to make enough money and also retire permanently. Rather, to place yourself in a place where you're not going to base your every choice on just how much does it cost. We are not going to approve that brand new job offer just because it pays slightly greater. Possibly going to continue performing as you do, but rather working with things that matters to you one of the most. With fewer economic problems, hopefully your life is going to get a little bit more bright. That's all for now. Thank you for watching this video. I hope you guys have enjoyed this video. If you did, please give it a thumbs up. And if you are new around here, then subscribe and press the bell button to get notified of all the exciting videos we make for you.